Look for the banking space and the overall equities market ahead of the opening bell. I'm joined by Aurelia Additional. She's the head of research at Stanbic IBTC. Well, thank you so much for joining us, really.
Hi.
Well, let's start by getting your thoughts on the kind of movement we're seeing in the Nigerian equities market. I mean, it is now at 36,224.44 points.
Yes, well, I think that everyone is pretty much aware that there's very limited impetus for the market right now. There is far more in the way of uncertainty and headwinds than there is in terms of catalysts from a bottom-up perspective. And as we know, the banking sector is the biggest part of the market, and it has, specific challenges all of its own. From a sort of balance sheet point of view, yes, that they're in a stronger position, but in terms of the regulatory horizon and the sort of monetary policy environment, I think there's a fair amount of uncertainty. So I think the market is going to sort of bump around in a fairly limited range, and if anything, trend slightly down over the coming months, to be quite honest.
All right, well, I was talking to an analyst yesterday who, of course, was of the opinion that if we saw an uptick in the market, it will be a mere glitch, as the market still lacks certain stimulus, including absence of liquidity. Now, what's your thoughts on this?
Well, I think the reason for the lack of liquidity is for starters, is on account of the uncertainty that people are experiencing. So they're reluctant to get involved. I don't think there's any shortage of money to sort of invest in the market, particularly given the offshore participation in our space. But on a global context, there are other things to consider apart from the fundamental value of Nigerian stocks. And the stocks themselves, particularly, as I mentioned, the banking sector, there's a fair amount of uncertainty or relative lack of visibility on their earnings over the next 6 to 12 months. And of course, the pattern over the last few years has been that people are less comfortable with the banking stocks until they've seen them go through an audit cycle. Apart from those names that have interim audits, we have seen a bit of a trend of a pullback in performance. In the fourth quarter, once the auditors have done their work. So there's plenty of reasons for caution, in my view.
All right, well, staying with the banking space, now that sector dominated value traded on the Bourse yesterday by about 53.74%. But however, the index declined by 0.21%, marking the second day of consecutive loss. Now, what's your opinion on that sector as it stands right now?
I think that in terms of liquidity and to some extent in terms of value, it still probably offers the best destination for investors. But the point is that I think we've passed the point in this market where people can take a very short-term view. You have to pick names that you're comfortable with for a 6, 9, 12, even 2-year time horizon. There's going to be plenty of noise, and the point is it's very difficult to make that call right now because of the near-term noise. We've seen a lot of noise in the political space, which obviously people are watching, and no one wants to overcommit themselves to this market and find that there's a lot of volatility and a lack of liquidity, and so they can't exit.
Well, now, on the recent 50% increase in CRR on public sector funds, some analysts say we might be seeing an additional increase of 25%. Now, should we see this scenario take place, how might that affect a bank's bottom line going forward?
Well, I think that it doesn't take a genius to work out that this policy applies pressure on bank earnings simply because there's a whole slice of deposit sourcing that is now not available to them. I think that the banks to some extent are positioning for this and are anticipating this. The 50% was a big move, so. The writing is on the wall that public sector funding cannot be, a central pillar necessarily of the deposit gathering plan, over the medium term. And I think this is consistent with a broader CBN agenda of objectives of driving greater financial inclusion, of encouraging banks to have a broader interface with the regular Nigerian customer base, as opposed to relying on corporates and large institutions for both deposit gathering and for lending. So go out there, find new customers, find products that attract them, bring a larger segment of the Nigerian adult population into formal banking as a means of sustainably growing the deposit base. I think this is the medium to long-term agenda, and I think that the CRR policy is a part of encouraging banks down that road.
All right. Well, now, going back to the global economy, the impact of the global economy, which you mentioned earlier on the markets. Yes. Now, there are some uncertainty hovering, which many chalk up to U.S. Federal Reserve of tapering its monetary stimulus. Now, how much of an impact are we seeing, or can we envisage?
Well, I mean, I think that there's a general acceptance. I mean, even if they hadn't made an announcement, clearly, the looseness was not going to continue indefinitely. The tapering is necessary, and it has to come at some point. And I think there's a general acceptance that, by the end of this year, we will begin to see that. But it's not just that. There's also the geopolitics, the challenges in the Middle East right now, and the impact that will have on even oil, on the sort of just the broader sentiment and risk appetite, I think is also a factor. And of course, if there is a challenge with oil, to some extent, a higher price supports Nigeria, but we also have, at present, a fairly significant challenge on the production side, which gives rise to concerns with respect to the currency. So, there's the global factors, there's the local factors that give enough reason for global investors to not overcommit themselves to the Nigerian market at this point in time.
All right. Well, I would like to get your thoughts on inflation numbers for the month of August. Now, it should be released on Monday. Now, my earlier guess thinks, it should tick up to about 8.8%. What do you say?
Well, our view on inflation is for, moderate pressure as we move through the end of the year. I think that the House view is kind of fairly clear on that. So it's not something that we're watching with any particular anxiety. We think there are bigger concerns in the space at this point rather than the August inflation number.
All right. Let's look at what's your outlook for the market going forward, and if you can also chip in your stock picks, for next week.
Well, we don't really pick stocks on a weekly basis, to be honest, but our position really is that investors in this market, as I mentioned earlier, should focus on quality. They should not. It's risky to take positions in names on a very short-term basis, because you can't necessarily be certain that you can execute your strategy because liquidity is low. So we are liking in the banking space. We like GT. In the consumer space, we like UAC. We like the cement space fundamentally, although the stocks have performed pretty strongly thus far. And there is something of a challenge with respect to gas supply that we've seen on the horizon that may impede margins somewhat as we move through the second half of the year. But essentially our core position is if you're not happy to hold a stock for 12 to 24 months, then you probably shouldn't be holding it at all. Focus on quality, focus on the more liquid names, and those names should be more resilient no matter what happens through the economic and political cycle.
All right, well, thank you very much, Rayleigh. I've been speaking with Rayleigh Adesina. She's the head of research at Stanbic IBTC. Well, that's where we leave it from the Open Exchange West African team for today. After the break, we cross to international programming. CNBC Africa is back at 12 p.m. Central African Time with Power Lunch. We'll keep watching CNBC Africa. We're first in business worldwide.